Hey everyone, happy Thursday, August 14th. It's a little after 9 a.m. on the West Coast, and it's time for another market update. Well, last week we had a nice little rally going and wanted to keep that going this week. The main news coming out of the markets this week had to do with inflation. Keep in mind, the Fed's two jobs are to keep jobs strong and inflation low. So those are the two main data points we got to keep a look at to make sure, hey, they're gonna cut rates eventually. So we got CPI inflation for July that came out a couple days ago, and it was a mixed bag. But as I say here, it did keep a rate cut on the table in September. So it wasn't a great report, but it also wasn't a horrible report, which we really wanted to avoid. So as you can see here, the headline number, which basically all encompassing, was up 0.2% month over month. The core, which takes out food and energy costs, was up 0.3%. Headline came in right about expected 2.7. The core, they were hopeful it would be about 3%, but it got rounded up to 3.1. So a little weaker there. But as I said, the main thing here was we wanted to keep the momentum going. We wanted to avoid that, really bad number, really big jump in the CPI inflation, because then that would have changed the narrative in the markets that, and maybe to the Feds, the way they look at things of, hey, inflation's coming back, the tariffs are having their effect now. We can't cut rates because we don't want inflation to come roaring back. So overall, not a great report, but not an awful report. And that's really what we wanted to avoid. And because of that, we had a nice couple days there coming off of this report. However, this morning we got the July PPI. So this is inflation on the producer side. So the people that produce the goods that we buy as consumers, what their inflation was, and this came in hotter than expectations. The month over month number was supposed to be about 0.2%. Last month I think it was flat at 0%. Came in at 0.9% this month. So it looks like maybe some of the tariffs hit the producers. Maybe instead of passing off to the consumer as much, they took some of the hits themselves. This chart shows the year over year change going back to January 2021. So obviously it was really high throughout the pandemic, came down really, really low. And then we've been kind of ticking back up, had a nice couple month, stretch there to get a little lower, but coming back up now. And again, this is important because, this time maybe they didn't pass this on to the consumer as much as they would. But in general, anything that producers get charged, they're going to eventually pass on to us to keep their profit margins where they want them. So again, this one wasn't good. This one, the markets are kind of retreating a little bit off of, because again, it brings up the ghost of maybe, inflation's going to hit with tariffs. Maybe the Fed won't cut now in September, things like that. So still a strong idea that the Fed will cut, but this wasn't a good report, coming off that CPI one. Next thing, just more of the tariff stuff. It looks like China and the United States have extended the deadline for 90 days. So there's some talk there. And again, how are tariffs still playing into these inflation numbers? And then on the Fed chair, Chairman Powell's term comes up next year, I think next May. But there's an awful lot of talk still about maybe him being replaced early or stepping down. And now they've started talking about who his possible replacements are. So again, it's not something that's going to affect things right away, but something to keep an eye on, because obviously the next chair, the way they come in, what their ideas are, what they should be doing, could have an effect on policy, which will, obviously have an effect on rates and mortgage rates eventually. Initial jobless claim. So this still is just, kind of really low number at 224. Expectation was about 225. Still shows, people maybe aren't getting laid off as high a clip as maybe as people were expecting. But, once they do lose a job, it's been harder and harder to find a job. So again, we have to keep an eye on that, because the Fed's keeping a close eye on the job market. Average 30 years. So last week we were at 6.55. Today we're at 6.53. This might tick up a little bit because of this PPI report throughout the day, but still, we basically held our gains after that jobs report, hanging out in the, like about 6.5, which is good to see. Next step, obviously, would be to get under 6.25 and get closer to that 6 number. Like we talked about, the lower rates go, the more will turn into a seller's market, because there's going to be more demand. So I know a lot of people want to wait for rates to keep dropping, but right now seems like a good time for buyers, just because sellers are willing to negotiate with you. There isn't a lot of demand out there still, so there's a lot of houses on the market in certain areas. Gives you, it's more comfortable buying experience right now. Than again, rates drop, but the market goes back up. Prices go up, there's more competition, and so forth. Next thing, so important dates upcoming. So these are all the different things coming before this Fed meeting on 9/17. Right now, the markets are predicting a 90% chance that the Fed cuts rates at that meeting. Yesterday, before this PPI report, it was at 99%. So just obviously, data can change that. But right now, we got at the end of August, we'll get the PCE, their favorite form of inflation. Then we get the BLS jobs report early September. We get that CPI report we got this week one more time, September 11th. And then again on the 17th, the Fed will meet and their meeting and announce, kind of like Groundhog Day, whether they're cutting rates, not cutting rates. By that time, we will have a very, 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 very strong idea what they will be doing. Generally, the markets already know, it's already being baked into the numbers. But really, the big step there at that meeting, or what we'll be looking at, is the language afterwards in the press conference, the language in the statement they release, and what their thoughts are going forward. At an October meeting, and then I think one more meeting in December to end the year. So obviously, we want them to cut rates at all those meetings. So we're going to have to hope for low inflation, hope for not too strong of a job market, and hopefully we get those Fed rate cuts. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody.